The market traded higher yet again today with the SPY closing above 606, now trading below 605 with the Amazon miss in after hours. But ever since the lows of Monday's trading session, we are higher 4 days in a row now. And if we just zoom out here on our chart, we can actually see that we are up approximately 5% from the January 13 low to today, even though we've had volatility, even though we've had a number of drops in the market between that time and now, we're up over 5%. So the market remains exceptionally strong. We continue to see gamma exposure coming in at higher prices. Today in particular, we saw gamma exposure growing at the 610 strike on the SPY. The 620 strike, however, remains the largest positive gamma exposure concentration. That is our ultimate target heading into March, so we're about 3 to 4 weeks out. But I think sometime between now and the March options expiration, this 620 has a pretty high probability of being tagged. So like we were mentioning in yesterday's video when talking about the S&P 500, on the SPY, we need to breach this resistance at 610. We made 2 attempts in the last couple of weeks, and it's really good to see positive gamma exposure growing at this 610 strike. I think there's a really good probability that we're going to break the 610 resistance and head to 620. Also, like we mentioned in yesterday's video, a pullback into the 600 level or around the 6,000 level on the S&P 500, I think makes sense at this point. This is also our zero gamma exposure line. You can see this is a delineation in the options market between positively and negatively skewed gamma exposure. So a pullback into that line, which it looks like we started today, makes a lot of sense. I think that would be a great opportunity for an entry point back up to this 610 level. Another data point that I'd like to point out is the historical gamma exposure. Along with rising prices, we have seen gamma exposure grow each of the last 4 trading sessions until now. We are in positive gamma exposure, so that's a really great sign. Also, if we scroll down here to our gamma exposure data graph, we can see implied volatility is at 37.1. This means implied volatility has only been lower 37.1% of the time in the last year. So this is a big come down from where we were. We were as high as 80 just a couple of weeks ago. So implied volatility has really reduced. We've also seen that in the VIX, of course. And so that's going to be a really important factor along with a positive gamma exposure environment. You can see we are just above the zero gamma exposure line here on our GEX intensity gauge. And so the gamma exposure on the SPY is skewed to the upside. We've got low implied volatility, all the ingredients necessary for a buy the dip scenario. The one weak spot over the past week has been Bitcoin. Despite the markets in general going higher, Bitcoin has really gone essentially nowhere, trading just above the 96,000 level. We are entering our lower dealer cluster zone. This is an area where we could see some support from dealers. I suspect though, with volatility creeping back into Bitcoin, we may have a little bit lower to go. We've seen the 90,000 to 92,000 level be a very strong support level, and so it wouldn't surprise me to get a little bit further of a drop back into this level. That'd be an excellent entry point in my opinion from a risk reward perspective. We still see gamma exposure positively skewed to the upside, with the largest concentrations at the 110,000 strike as well as the 120,000 strike. So ultimately, what we'd love to see is a bounce out of support in the crypto markets. This is our favorite indicator for risk on sentiment. And so a bounce from support from crypto markets, in particular from Bitcoin, would be an excellent signal for equity markets in our opinion. A move back up to the recent highs, which is around 108,000. A break above that level would give us our next immediate target of 110,000. So that's something that is on our radar, and this actually looks like a pretty juicy entry point here between 90 and 95,000. Next, let's take a look at small caps by taking a look at IWM. IWM trading just below 229. Small caps have been pretty quiet over the last couple of months, range bound between 220 and the 230 level. The gamma exposure distribution is evenly distributed. You can see on the upside, we've got large positive gamma exposure concentrated at the 235 strike. And on the downside, we've got gamma exposure at the 215 and the 220 strike. So the fact that IWM has moved up along with the rest of the markets back up into this resistance zone up here gives me a lot of confidence actually that I think this could get broken to the upside here in the coming trading sessions. This would actually be a big breakout point for a move back up into this 235 level. We do see gamma exposure growing at 240 and 245 as well, although not as large as what we see here on the downside. But I think if we can break this, these puts are going to get decimated if price can make it above 230. So that's something we're going to be watching very closely, and we're considering putting on an option strategy on IWM in our portfolio. By the way, you can follow us in our community Discord and see all the moves we're making in our portfolio for free. Link in the description below. So earlier I mentioned we were trading lower in the post market, and a big part of that reason is Amazon issuing disappointing revenue forecasts, the weakest growth on record. Not a great sign from Amazon. Let's take a look at the gamma exposure data and see how things are looking. So Amazon trading around 233 here in the post market. Not a huge drop, but as you can see, market participants were skewed to the upside. This is one of the reasons why we typically avoid earnings plays in our option strategy, is because earnings represent a wild card. And so even though market participants were concentrated at the 250 strike here for Amazon, expecting a positive beat, didn't happen. Obviously, the earnings were a disappointment. And so a slight retracement, although not as big as I would expect, though, from these numbers. We'll see how things shake out tomorrow. As far as trading today, we did have big volume coming in the options market between 240 and 255. So I think if we do see further weakness in Amazon down to, let's say, the 230 level, or even down to the 225 to 220 range, this has actually all been a nice support zone for price earlier in January. And so if we do make it down to anywhere in those levels, that could be an interesting point from a risk reward perspective for a long entry back in to these 240 and 250 levels. That may take a little bit of time to play out, but it's something we're watching for. We try to anticipate moves like this where we see support ahead of time and we see positive gamma exposure. We see market participants coming in the options market at higher strike prices. And so when we get these hits and price trades lower in the underlying security, this can often lead to extremely outsized returns by taking advantage of these dips in the market while positive gamma exposure and option flow comes in at higher strikes. And so this is a good example of what's happening here on Amazon, an event-driven move. And so we'll be watching this in the coming days if we do get some lower prices here. Next, let's take a look at Nvidia. Everyone thought Nvidia was left for dead, but it's really made a big move this past week, coming from below 115 to now approaching the 130 strike, trading at 128.46 here in after hours. Getting above this 130 level is going to be a big potential breakout zone. I don't know if Nvidia has enough juice to get through that level, but if it does break out, that's going to be interesting to see how the market reacts around that price. We actually entered a bullish option strategy in our portfolio right after Nvidia got hit after the DeepSeek AI news. So we actually got in around 117.5, which was near those lows of the previous week. Obviously, since then, Nvidia has been pretty volatile. It actually dipped below that level and came all the way back this week. So we're sitting pretty good here, $10 higher than where we initially entered. And one of the big reasons we entered is because the gamma exposure at this 130 strike, as well as at higher strikes like 135 and 140, have all had large positive gamma exposure concentration. And so it looked like a bounce was going to come at some point in the next week or two. And sure enough, we've got that this week, approaching the 130 strike. Again, I'm looking for a breakout above that level, but ultimately I think there could be some congestion in this zone, as we've seen here, both from the upside and the downside, both supply and demand. This has been a major level over the last couple of months for Nvidia. So we're going to continue watching closely. We've got a couple of weeks left on our option strategy. So we'll see how that plays out in the coming trading sessions. Next, let's take a look at Netflix. Netflix trading at 1,015. If you've been watching our past YouTube videos for the last 6 weeks, you know we've been highlighting the 1,000 level, all while Netflix was trading down here below 900. And so obviously after earnings, it got the pop right into that 1,000 level. It's been consolidating over the last couple of weeks. And most recently, as the gamma exposure data has shifted higher, we've actually entered a position to collect some premium. And so you can see the gamma exposure is mostly concentrated between 1,000 and 1040 on the upside. And that's really our target range for this trade. And so the move today was nice to see, and the move really over the last week has been great as Netflix has traded higher. We continue to see strong options volume between 1,000 and 1050 on Netflix, and so this gives us added confidence every single day that we see this volume coming in at higher strikes, that market participants are still bullish on Netflix even after the huge move up that we had after earnings. So this is a name that we're looking to continue to collect premium on in our option strategy. We're actually using an iron butterfly to collect premium in this zone, and so still looking good here on Netflix. And as a reminder, you can access our gamma exposure dashboard and our option flow analytic tools by heading over to geeksoffinance.com. We're currently running a promotional special, $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. We do have a few spots remaining, so take advantage of that while you can. Our premium members also get access to special channels in our Discord community where you can see all the trades we're making in our own portfolio. You can view our strategy session videos, and you can get ideas from other members in the community who are sharing their own analysis and trade setups. Definitely don't want to miss that. Link in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.